Kids and most all dependents, but kids in particular, provide enormous tax benefits on an individual tax return, both individual federal form 1040 and most any state with an income tax. But kids and who and when to include and what tax benefits you get is far from an easy topic. This short piece is an overview of the individual tax return implications of kids on a tax return, who can claim them, what tax benefits to look for, and considerations to know about. You don't need to know anything about taxes to get value from this short piece, and if you do know about taxes or if you prepare taxes, you may even get more knowledge than you had. In the next 4 minutes, I'm going to share with you 5 important considerations related to kids on a tax return for you and or your clients. So get ready. First off, kids drive huge tax benefits, which lead to many bigger tax refunds. My quick 6 biggest tax benefits related to having kids on a tax return include a deduction for the dependent exemption, potential head of household filing status and its much lower tax rates, child tax credits, bigger earned income tax credit, dependent care credit, and the adoption credit, just to name a few. Today's families are complex, and the tax rules determining an allowed child on a tax return are even more complex. Many factors like relationship to the child, age of a child, where the child lives, non-standard dependents like nieces and nephews that live in a home, foster children, adopted children, non-custodial parents who get to claim the child on a tax return, all are part of the considerations when determining a child's status on the tax return. The IRS does have very clear rules on children claimed on a tax return and when a taxpayer gets to include them. There are 5 primary factors used by the IRS. Tax identification number. All tax return dependents must have one. Relationship to the taxpayer. Age of the child. Residency or where the child lives or lived during the tax year. And finally, a support test. Did the child provide their own support or did the taxpayer? Those 5 factors determine who gets the kid on a tax return. Well, the factors anyway, and who can prove it. But more about that in a moment. There are many common myths surrounding children on a tax return, and they can lead to everything from mistakes on a tax return that cause anything from an IRS audit or assessment or banishment from the EITC program to overlooked deductions and missed tax refunds. Some common tax return errors or myths that even the most experienced tax professionals make are: the first taxpayer to file and claim dependents and children get them. Nothing could be more wrong or farther from the truth. The person who gets to claim the kid is the person who meets the 5 tests, or can prove it. Kids who live in my house can be deducted on my tax return. Well, maybe, maybe not. It depends on the 5 tests, and in particular the relationship test. Unused kids by another taxpayer can be claimed by me on my tax return. Again, not so fast. It depends on the 5 tests. From IRS assessments to missed tax benefits, misunderstanding the dependent tax rules can lead to many mistakes and pain. Avoid the pain. Know the rules. Documentation is a key consideration. As with any tax deduction or tax credit or benefit, it's not what you think or what you want or what's fair, but what can you prove. Good documentation in your files is important, whether you're the taxpayer or the tax return preparer. Keep good documentation in case of an audit or disputed child-related deduction. It's as important to be able to prove you can claim the kids on your tax return as it is to follow the rules for actually claiming them. The following is an IRS publication used for guidance on what types of issues come up during dependent or kid tax return situations and the specific type of documentation the IRS will be looking for. I know this is hard to read and a bit overwhelming, but the point is simply this. There are specific IRS rules, as we've said before. This is one part of them, and a playbook for what the IRS will need to grant you a deduction or to give you back what is yours if another taxpayer claimed your dependent. As a taxpayer, it is important, and for tax return preparers, equally so. Kids are worth thousands of dollars on tax returns. The benefits range from deductions of several $1,000s to lower tax rates to huge tax credits, as with the child tax credit, dependent care credit, earned income credit, or the adoption credit, just to name a few. The rules are confusing on the best of days, and when the rules are confusing and the tax benefits large, there are going to be issues that range from errors to missed benefits to stolen benefits taken by an ex-spouse or another taxpayer. Know the rules and keep your tax benefits and your client's tax benefits. They are worth it.